I'm joined by John Bortz, President, Chairman, and CEO of Pebblebrook Hotel Trust. So, John, over the last few years, your company's been very active redeveloping hotels. Can you discuss those activities and what you think the upside is there?
Sure. So part of our expertise as a firm has been kind of the ability to buy properties that are not living up to their full potential. So think about a 7-Eleven on Fifth Avenue in the retail world where it really could be a Tiffany's. And so we like to buy properties where we can redevelop them, position them dramatically, high style, high design, and bring in a whole new class of guest that's willing to pay significantly higher rates. So we're basically working through the last of the hotels we bought, which were in 2015, and we're just finishing up our last 4 transformations this year. And the benefit that we have as a company is these redevelopments typically take 3 to 4 years for us to turn over the customer, bring in the new customers, and get the benefit of that. So the capital's been put out, the investment's been made, but we haven't gotten the full benefit yet. And so that gives us a really nice tailwind over the next few years.
What's been the biggest surprise to you in the lodging business this year?
So the biggest surprise has probably been this disconnect between a really healthy macroeconomic environment, strong employment growth, consumer confidence. The customer has great balance sheets. We've seen very strong domestic travel growth, particularly the leisure customer. But the disconnect has really been business travel. While the creative industries are doing very well, there's some legacy industries, whether it's financial services, maybe even manufacturing to some extent, the multinationals that were struggling financially. And as a result of that, they haven't been traveling. So historically, business investment, corporate profits, employment growth would correlate to a stronger level of business travel demand than what we've been seeing this year. So the real surprise has been on the negative side this year.
And I'm starting to see all these kind of boutique brands that are popping up from a lot of the major brands out there. I know that you had a lot of involvement with that at LaSalle. You continued it now with Pebblebrook. Give us a little bit of an idea of what's going on in the market there.
Sure. So this is a trend that's really going on not just in lodging, but in almost all industries. If you look at our industry, it's a desire for personalization. It's really a secular trend where people want to collect experiences instead of collecting another purse or another pair of shoes or sweater or whatever it might be. And so that's happened because of the internet and the social media sites. And you probably can't go out to dinner today without seeing people take pictures of their food before they eat it. It's all about the sharing of experiences, not just having them, but sharing them. And the independent hotels or the boutiques or lifestyle hotels are really targeted to that growing mix of customers who are looking for a unique experience. So at our hotels, as an example, if you go to San Francisco and you go to Fisherman's Wharf and you're kind of immersed in this whole Port San Francisco historic thing, when you get to the front door of our hotel, it shouldn't end. It continues within the hotel so that experience really surrounds you the entire time that you're in the market. So we think that's a growing trend, and it's really one of the reasons we focus that way, both with our independent hotels and then with some of the branded hotels that we have.
And I know that this year, Pebblebrook's been pretty active in terms of selling off assets, using that capital then to engage in stock buybacks. Is that something we can expect to see in 2018?
Sure. So it's really going to be opportunistically driven. We are still selectively selling some hotels. We had announced a plan early last year where we would sell between $500 million and $1 billion of hotels was our expectation. We've sold a little bit under $700 million to date. We've bought back about $100 million of stock. Our stock has gone from, since we started that, $25 to $36 today. It's a little less attractive from an opportunistic perspective. So we'll still selectively sell some next year within our portfolio. It's really driven by taking advantage of a very strong private market for assets, take some profits, and then we'll buy our stock back if it's an opportunity, if there's an attractive discount for that use of capital.
Well, John, thank you so much for your time.
My pleasure. Thanks, Alan.